Greetings, Jonathan Camarda. Coming to you a little early this month as the back half of February seasonally misbehaves, and this year is no different. So let's get started at the top. Industrial production up. All right. Consumer spending down. Consumer is in trouble across the board on debt levels, credit card loans, etc., as having to resort a lot to secondary banks out there with rates and as such. And it's going back to really, dare I say, for the last 15 years. We know what happened then as far as what the consumer is looking like, especially on the lower income side. Just saying, this is what's in the data. Now, as far as we look at the residential real estate markets, inventories are starting to rise into seven figures nationally. Hasn't really affected prices too much. Again, you have a lot of people living in their mortgages, not their homes. In other words, lower rates, keeping people in some of their old homes and as such. But again, what we are seeing is inventory starting to rise on a month-on-month basis. And so again, that puts some pressure on obviously prices. We shall see as becomes more of a buyer's market, so to speak, for you, those that are looking to sell your homes. Now, as we start to look at some of the other data, we are starting to look from a macro trend. Gold continues to outperform stocks and bonds. So obviously we have our allocation there. Bonds, however, are starting to outperform stocks. And this has just happened more recently, so we're keeping an eye on that. More in particular with the yield curve coming down on the longer end, right? A little lower on the 10 and the 20 years has now created some outperformance on longer term bonds, which is delineated from the last time we spoke. And so we're looking at that aspect as well. And bonds, like I said, outperforming stocks more recently. Within the equity markets, okay, again, a little bit more of an ominous sign there as we see consumer staples and we see healthcare rising to the top. Up there with communication services, with technology and discretionaries really dropping, with your real estate, industrials, etc., in the middle of the pack there. So could be short term, but there are other signs as well. As we look at the equity markets over the last couple of weeks, we've seen increase in volatility and some slowdown in the momentum. Again, value stocks, large cap value, best performer this year. However, momentum to the upside, low volatility stocks are now starting to outperform. And the technical trend is market, as it's gone higher, has had weaker momentum underneath it, which is almost like looking at a sailboat with a little bit less wind in the sail. Still sailboats moving forward, but a little less momentum in that wind. So we have to keep an eye on that. Now we look across the currency markets, the dollar, which we know has been just dominating over the last several months, the tides have turned as well with the euro, the yen, the British pound, the Canadian Aussie dollars, New Zealand dollar, etc. They're all in upward trends over the last few weeks versus the US dollar. And again, with rates coming down, might be, look at some correlation there. And now what we have to look at is that generally should be a nice breeze behind equities. However, what we've seen is outperformance, and some of you've seen in your strategies, right, with China that we've taken advantage of, and then of course Europe and other developed international countries, as they say, US. So is there a changing of the tide as the United States, which has been the prettiest market over the last several years, might be again handing some of that mantle back? Again, momentum starting to slow. The market has been in a bull market since October, November of 2022, if you want to parse. And again, could there be signs of cracking with some of these other macro factors? So we're watching that. Now, the National Association of Active Managers, they have increased their allocation to where they currently went into last week with 91% exposure. More aggressive clients, you'll see that as well. However, don't be surprised here over the next few weeks, again, depending on the trends, if that exposure and the levering in a risk-on market, we start to pull down or batten down the hatches a little bit. Again, until next time, Jonathan Camarda. Till next time, my pleasure.